Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, January 9th, 2019. Let's do an update on the S&P target, folks. When we were trading all the way down here, I said buy the market. It's going to 260 to 262. People thought I was nuts, as usual, because I'm willing to step out and read the charts and make the hard calls. The media, the talking heads on CNBC, they were all saying, oh my God, doom and gloom. The markets rallied. Then just last Thursday, Apple warned, again, doom and gloom was posted everywhere. I said, no, it's a 382 Fibonacci retrace, classic bullish retrace. What happens? While everyone else is gloomy and panicky and ready to jump off the roof, the markets rally higher. And look at this. We're now nearing target. Today's high, 258.80. Again, I said 260 to 262. That's $1.20 away from the low end of the target. We'll have to see if we get there in the next couple days. Markets are short-term overbought. I expect a pullback very, very soon, but I think we probably tag the 260 to 262 level first. The pullback will be sharp. It'll be panicked. It's most likely going to be a resumption of fear based on China tariffs and all that other stuff, maybe even the Fed creeping out again or something emerging that we don't see at this point. The government shutdown still going on. That's a key concern because every week that goes on, 1.1%. 0.1% of GDP is going to be lost. So, again, that's the key there. And we'll see again how it trades, but that is what's going on here. Now, I wanted to update you guys on a couple trades. So, number one, I'm going to look to short the S&P when it gets up to this trend line here. But look at the Russell. The Russell, same thing. We sold the TNA recently for over 10% gain as we nailed that off the lows, and it's rallied up. You can see this is the Russell. The TNA is the triple Russell. But look at this 50 moving average. 145 or just below, that's what you're looking for. When this thing tags, folks, you got to pull the trigger. At least I'm going to pull the trigger on some TZA, which is the inverse, meaning it's short the IWM 3 times. We'll try to make another 10% on the next flush in this market. But again, this is what I love, folks. This is swing trading at its best. Today I closed out like 5 or 6 positions long in the research center. Overall, nice profits. Just the last few days I've been closing out other profits. We still have a few out there, positions, some in the money, like Valero up $3 on Valero, a couple others as well that are up nicely. Nvidia, we're in Nvidia up about $5 or $6 right now. I still think those have a little bit more room to run. So I'm leaving those on the table. But basically what I look at myself as a money manager, and I always tell that to our members, is you're a money manager of your own portfolio. So as the market's going up and you're in the money, you take a little bit off like a smart money manager would. You wouldn't leave it all on the table because then if the market turns before you think it's going to, then all of a sudden you're shit out of luck, right? So you want to do that. That's the smart way to do it. Big profits is a long-term game. And again, that's exactly what we're seeing here. So IWM at the 50 MA, that's going to be a beautiful thing. Let's look at the Qs here real quick. Qs, look at the 50 MA right here. So that's the level on the Qs. Look at these pivot lows here. There's a trend line up here that's actually inconsequential at this point, but right in this range. I mean, this is really the gravy of it. Look at this. Pivot, 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 and then 50 MA. So you got like a little tiny bit more on this upside. And one other thing that's telling me that the market's likely going to turn here, look at Apple. Here's your gap fill from the day Apple warned. Remember, Apple warned and had this huge gap down? Look at how you're right back to that. That's gap fill. That's going to be resistance. It's also the 20 moving average. My guess is Apple's going to go sideways and pull back a little bit over the next week or two into earnings. I do think they're going to do better than the warning on earnings, but I think for the most part, people that were stuck in Apple here are going to unload at the gap fill. They finally got it back after this crazy drop. They're going to say, okay, I'm washing my hands of this thing. And that'll probably keep a little pressure on Apple until earnings. Earnings is their one chance to kind of get out from under the negativity. And if they have a little bit of a better quarter and Tim Cook says some positive things, then the stock can rally. The other thing I want to talk about is oil, folks. I told people oil would rally. We were long oil. We made over 10% in the UCO, which is a double long oil. And again, look at oil just ripping today. Target right here. Look at this. Perfect charts. I mean, charts are just so perfect. Pivot high. 50 MA, that's where you're going. You're almost at target on that. Oil starts stalling out. You're going to see stocks stall out. Today I took profits or exited my Schlumberger and OIH. So again, look at them rally in OIH here and Schlumberger. Look at these moves. I mean, these are incredible moves off the lows, really ridiculous sell-offs. But again, they're due for just a pullback. I still think they're going to rally more down the line, but oil needs to stall out here, and you're going to see Schlumberger, some profit taking coming in on these things. I'm bearish on Netflix here. Netflix is a key level. Boeing is a key level. I think that's a good short as well. I haven't taken any shorts yet. I want to make that clear. But I am taking longs off the table, taking profits, and then I'm going to start inching into long shorts probably within the next day or so. So if you're a member of the Research Center, if you're a member of the options, be ready. Let's rock and roll. Let's have some fun. Let's make even more money in 2019. Have a great one, guys. Come join us at InTheMoneyStocks.com.